Today, Elon Musk makes Dogecoin Twitter's new mascot. Regulatory headwinds test Binance's market dominance. And Andy Long of White Rock Management discusses whether Bitcoin miners are staging a comeback in 2023. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are mixed today, with Bitcoin trading mostly flat at the $28,000 level. At the same time, Ether rose back above $1,800, and Dogecoin soared after the latest stunt by Elon Musk to vouch for the meme token. It rose a whopping 25% in the past 24 hours. Okay, let's talk more about that trolling from Elon Musk to kick off our top stories. Dogecoin's mascot replaced the famous blue bird on Twitter's website yesterday, seemingly out of nowhere. The change was accompanied by a tweet from Elon Musk referencing the switch up, but it also gave little explanation. It does come just as Musk's lawyers seek to throw out a lawsuit which alleges the Tesla and Twitter CEO deliberately drove up the price of the token. His lawyers contend that his comments were just silly tweets, and now this latest stunt seems to be Musk doubling down on his self-proclaimed Doge father status. Next, Binance might be the largest crypto exchange by volume, but its dominance has taken a hit since the CFTC sued the company. Data from digital asset research firm Kaiko found that the exchange's market share dropped 16% since the CFTC lawsuit and after it ended zero-fee trading, although it still holds about 54% of the market share. In the US specifically, Kaiko also found that Coinbase's market share took a hit after its own regulatory run-in. It fell to 49% after receiving a Wells notice from the SEC, which usually warns of impending regulatory action. Last up, Voyager's creditors are warning that they could lose millions of dollars if the bankrupt firm's legal objections aren't solved by April 13th. According to CoinDesk, the bankrupt crypto lender's creditors urged the completion of the $1 billion deal from Binance US to acquire the company, saying they could lose roughly $100 million in value. CoinDesk also reports that Voyager submitted a similar filing, telling the federal court that delays could cost $10 million per month. Probes from federal regulators into the demise of Voyager Digital have slowed a deal that Binance US and Voyager reached at the end of last year, one which would let the US exchange scoop up Voyager's assets. Binance US is allowed to back out if the deal isn't closed within 4 months. All right, on to our main story. 2022 was brutal for Bitcoin miners. Insane energy costs and bleak Bitcoin prices led some to even file for bankruptcy. But with Bitcoin prices roaring back in 2023, how are miners faring now? I spoke to Andy Long, the CEO of White Rock Management, to get his take. So it's no secret that 2022 was really rough for the Bitcoin mining industry. You had energy prices soaring, the cost of gear was through the roof, the price of Bitcoin fell out, and a lot of companies filed for bankruptcy. The narrative is starting to change. What is the state of the industry right now?
There's increasing optimism, I think, in the industry. We've seen, a nice bounce off of the lows of December 2022, where we touched down in the low 16s. Bitcoin's back at 27, 28K. There's new hardware being deployed, which has a negative effect on earnings. But I think people are watching the halvening, which is coming in 2024 with increasing interest. And if we are where we were at this point in the cycle, in the future, it sends bullish signals for the future.
I do have a question about that because the halvening next year means that it'll be half as profitable to be in the Bitcoin mining business. Companies will have to upgrade their fleet of computers that they're using for the mining process in order to stay competitive. Are we imminently going to see half of the companies just go out of business if they can't keep up with upgrading their gear?
Great question. And here's the thing about the halving is we all know it's coming. It's we talk about perfect markets and efficient markets, but what we have to remember also is that there's another part of the puzzle, which is what's the price of Bitcoin. So yeah, if we were at 28,000K this time next year, then everyone would have a big problem, because suddenly instead of making 6.25 BTC every 10 minutes, the world is making 3.125. And that's not enough dollars to go around to pay for everybody. But if the price action follows where we think it will, based on the previous halvening cycles, there may be a difficult few months around about April, May, but then we expect to see a big acceleration in the fate price up into the six figures and beyond.
The question of M&A is one that a lot of people have been asking, especially as we've seen this flood of bankruptcies. Like, who's going to buy who? Is that still a conversation, or is it looking as though some of these players that are in bankruptcy are just going to retire operations and look to sell off their company for parts?
Definitely. Look, I'm party to some of these conversations behind the scenes, and I've not seen it as active in a long time. The fact that the market is we're still in this uncertain area, I think it makes deals easier to do. When we're in the euphoria of end of 2017 or in 2020, people are so busy looking at their balance sheets and the ever increasing dollar value of their wallet, they don't want to do deals anymore. Everybody overvalues themselves. So I think now is actually a great time for deals to be done. There's definitely real advantages in economies of scale and in consolidation in the market. And then the miners that were found to be swimming naked when the tide went out, they've got real assets, there's real hardware, there's real power infrastructure, and we're seeing that being redeployed into more efficient setup.
A couple of years ago, we saw this mass migration of the industry from China into the U.S. There is still reportedly this underground mining operation going on in China, but the vast majority of the hash rate has indeed migrated to the United States. Do you see that dynamic continuing, or, amid this larger regulatory crackdown, are certain players in the mining industry more concerned about setting up shop in a way that is very difficult to physically migrate operations?
Yeah, I think people will always be looking for new territories, and we hear about South America and other locations where there's some startup operations. Actually, the US is a great place to mine. Even the mooted energy taxes from 2024, it's not that big a deal. Like 10% here and there. It's not going to kill anybody. The size of these operations now, when you're talking hundreds of megawatts, it's not as easy to just kind of stick it on a truck and take it somewhere else. So I think the mining industry is got a strong future in the US. We're even seeing in some states, state legislatures passing new laws to protect the right to mine. And the competition between states as well will keep the market healthy.
At the same time, you also have states like New York who are creating new laws restricting what proof of work mining operations can open. So how does that balance out?
I think Governor Hochul's signing that into law isn't as big a deal as we were worried about. It's about steering the industry towards green sources of power, because it's specifically around emissions for power plants that are being dedicated to mining, as opposed to specifically mining. So in general, I'm a kind of an anti-regulation instinct, and it's the thin end of the wedge. But in this case, encouraging greener energy sources for Bitcoin is something that I think we can all agree on.
In terms of how the industry works, in the last bull run, 2016 to 2020, you saw it take much longer for companies to run out of money, to go bankrupt. This time around, it was much faster. So does this just become the new cycle? You build up and then half the companies go bankrupt? Or how do you create some sort of sustainable model here?
I think the trick is not to borrow too much, right? If you get over leveraged, then you're at the mercy of the market. And I'll tell you one thing about Bitcoin: it makes holding your equities easy, because the volatility of something like Black Monday is like an average Tuesday in Bitcoin. So you just have to build your business to be resilient to the market ups and downs that are coming, and then the people who massively over leveraged will fall before you.
Last question: how much of an impact has the closure of Signature and Silvergate had on the industry, if at all?
I think it's been bullish for Bitcoin. That whenever the kind of the fiat world has a scare, people look back to BTC and say, well, hang on a minute, it's scarce, it's decentralized, it can't be controlled by anybody, whereas banks fail and currencies collapse. So whenever people get nervous about fiat currencies, I think more and more people look to Bitcoin as the kind of store of value that nobody can interfere with.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.